Welcome, ambitious viewers. Today, we're diving into a fascinating phenomenon in wealth building. Why making your first $1 million is incredibly challenging, but why the second million becomes almost inevitable. This isn't just motivational fluff. We're going to break down the psychological, financial, and strategic reasons behind this concept. Understanding these dynamics can dramatically shift your perspective on wealth creation and potentially accelerate your journey to financial freedom. So, buckle up and get ready for some mind-blowing insights that could transform your wealth-building journey. Part 1. The first million. The uphill battle. Let's start by acknowledging a simple truth. Making your first million is hard. Really hard. But understanding why it's so challenging is the first step to overcoming those obstacles. The biggest hurdle for most people isn't external, it's internal. Our beliefs about money, success, and our own capabilities can hold us back more than any market condition or competition. Many of us grow up with limiting beliefs like money is the root of all evil or rich people are greedy. These subconscious thoughts can sabotage our efforts before we even begin. Overcoming these mental barriers is often the first and most crucial step in the journey to wealth. When you're starting from scratch, there's an overwhelming amount to learn. Financial literacy, investment strategies, tax optimization. These aren't typically taught in schools. This knowledge gap can lead to costly mistakes and missed opportunities. Building wealth also requires resources, not just money, but also time, energy, and often connections. When you're starting out, these resources are usually limited. You might be juggling a day job, family responsibilities, and your wealth-building efforts, stretching yourself thin. Making that first million often involves taking calculated risks. Whether it's starting a business, investing in stocks, or buying real estate, there's always an element of uncertainty. For many, the fear of losing what little they have can be paralyzing. In our instant gratification culture, the time it takes to build substantial wealth can be discouraging. It's easy to give up when you don't see immediate results. The first million is a test of perseverance as much as it is of skill. As people start to earn more, there's a natural tendency to increase spending, the so-called lifestyle creep. This can significantly slow down wealth accumulation, making that first million even more elusive. The journey is often filled with ups and downs. Emotional management becomes crucial. Panic selling during market dips or overconfident investing during booms can derail your progress. Part 2. The turning point. What changes after the first million? Now, here's where it gets interesting. Once you've made your first million, the game changes dramatically. Reaching that seven-figure milestone as something profound to your psyche. It proves to you that it's possible. The limiting beliefs that held you back start to crumble, replaced by a newfound confidence and sense of possibility. By the time you've made your first million, you've likely become financially savvy. You understand how money works, how to invest it, and how to make it grow. This knowledge becomes a powerful tool for accelerating your wealth. With $1 million, you suddenly have more resources at your disposal. This capital can be leveraged to generate more wealth through investments, business opportunities, or real estate ventures. Your approach to risk changes. With a solid financial foundation, you can take more calculated risks without jeopardizing your entire net worth. This opens up opportunities for higher returns. Einstein allegedly called compound interest the eighth wonder of the world. With $1 million as your base, the power of compound interest becomes truly apparent. Even modest returns can lead to significant wealth accumulation over time. High net worth individuals often get access to investment opportunities not available to the general public. This might include private equity deals, exclusive real estate investments, or early access to promising startups. As your wealth grows, so does your network. You start rubbing shoulders with other successful individuals, leading to new opportunities, partnerships, and insights. With $1 million, you can set up substantial passive income streams through dividends, rental properties, or business investments. This creates a snowball effect, accelerating your wealth accumulation. Part 3. Why the second million is almost inevitable now. Let's delve into why. Once you've made your first million, the second often follows more easily. Success breeds success. the confidence, skills, and resources you've gained make each subsequent step easier. It's like pushing a boulder up a hill. The first part is the hardest. But once you reach the peak, momentum takes over. Wealth tends to grow exponentially, not linearly. If you can achieve a consistent 10% annual return, which is reasonable for a diversified investment portfolio, your $1 million would double in about 7 years without you adding a single cent. By this point, you likely have multiple income streams: your job or business, investments, perhaps rental income or royalties. Each of these streams contributes to your wealth, often growing independently of your direct efforts. With experience comes wisdom. The lessons learned while making your first million help you make better financial decisions, avoiding costly mistakes, and capitalizing on opportunities more effectively. It's often said that the rich get richer, and there's truth to this. The wealthy have access to better financial advice, more lucrative investment opportunities, and can take advantage of economies of scale. As your wealth grows, you become more adept at optimizing your tax situation. This might involve strategies like tax loss harvesting, utilizing retirement accounts, or structuring your investments for maximum tax efficiency. Part 4. Strategies to accelerate your journey. Now that we understand why the second million is easier, let's discuss strategies to get there faster. Don't just diversify for the sake of it. Understand different asset classes and how they can work together. Consider a mix of stocks, bonds, real estate, and perhaps alternative investments like cryptocurrency or collectibles. Use debt strategically. Low-interest loans can be used to invest in high-return opportunities, accelerating your wealth growth. Just be sure to understand the risks involved. Look for sectors and companies with high growth potential. This might mean investing in emerging technologies, fast-growing startups, or expanding into international markets. The financial world is always evolving. Stay updated on new investment strategies, tax laws, and economic trends. Consider working with financial advisors, but always strive to understand the advice you're given. Conclusion. Making your first million is a significant achievement, but it's only the beginning. By understanding the psychological, financial, and strategic reasons behind this phenomenon, you can set yourself up for success and make the second million almost inevitable. Remember, it's not just about the money. It's about the freedom, security, and opportunities that come with it. Stay focused, keep learning, and you'll be well on your way to achieving your financial goals. Thanks for watching, and we'll see you in the next video.